Afternoon, welcome to the marketplace. Coming up this afternoon, independent power producers threaten to cut power supply by the end of next month if government fails to settle arrears to the tune of $1.6 billion. Also coming up, government to keep a 1% COVID-19 levy despite lifting pandemic restrictions and increasing calls for the tax to be scrapped.
The COVID health recovery levy that was introduced to help fill some of the expenditure holes might not be the most popular tax, but I entreat all of you to bear with us.
Also ahead, government-heavy borrowing on the treasury market triggers another marginal undersubscription of T-bill sale as interest rates surge. My name is Daryl. Thanks for being with us. Details coming up. Well, first up, the Chamber of Independent Power Producers, Distributors and Bulk Consumers is threatening to cut power supply to the national grid by the end of June. If government fails to settle its debt, this could create a huge power shortfall as the IPPs control over 65% of the available thermal generation capacity in the country. Joy Business is learning that as of April 2023, the government owed the IPPs $1.630 billion. The IPPs had indicated it would not restructure debt owed by the government. Ghana claims to cut $10.5 billion in interest payments on its external debt in 3 years to be able to successfully implement a $3 billion loan deal from the International Monetary Fund. Well, joining us on Zoom to discuss this is energy strategist Dr. Yusuf Suleimana. Good afternoon to you. What would be the implications if the independent power producers make good on this threat?
Yeah, good afternoon to you, Daryl, and good afternoon to Chelsea viewers in Ghana and across the globe. Yeah, indeed, this is not a very refreshing news, to say the least, Daryl, especially the time that it is coming. Yes, if they leave with the threat, or if they go ahead to execute the threat as per the way they announce it, there's going to be a serious problem, within the energy sector, especially the power sector, for instance. Now, if you look at how the IPP came to the picture, they came as a result of the fact that we had so much deficit in power generation, and so you remember Dumsor as a whole, in particular, somewhere 2015, 2016, and so when they came. Actually, they did a lot of good for the fact that they were able to make up the shortfalls within the power generation side. So if you look at it, yes, even though they signed some contracts that were a bit draconian, if I may put it that way, but they were able to relieve us from the power shortages. So yes, and they have come to stay. They've done so well to be able to make up for the generation side. So over the years, the generations have been robust, and we owe that credit mostly to some of these IPPs. I have to be very frank with you. Though I'm not very comfortable with some of the contracts that they signed at then, because we were so constrained, and they just have to squeeze it to sign some of the contract that we signed. And nevertheless, I think going forward, the government has to come and sit with them, just to come to a very good understanding. Otherwise, them taking some power out of the picture is not going to be welcoming. It's definitely going to lead to another potential Dumsor if they go to execute what they're threatening. Yeah.
Well, the IPPs have been trying to get issues concerning their debt settled for months now. Now we're hearing government may want to restructure debts it owes these IPPs. What would be a good compromise at this point?
Yeah, so a good compromise would be for them to sit down and then they meet each other halfway. Cutting power to the grid it shouldn't happen. I mean, government should do all that they can to ensure that should not happen. If they do that, certainly they're going to have a huge problem. So from where I said, I think they can come together and look at 50-50. The IPPs can also look at their business entities, and they are in to make profit, as a matter of fact. And so they can't just, there's that much they can do On the other hand, looking at how they have entered into the industry in terms of the power sector, they've come to stay. And so what I recommend is that the government should sit down with them and they can meet each other 50-50 halfway through. And then the government can think about other innovative means, to rejuvenate or to get the revenue flow through the, electricity company, especially the distribution sector, to come and make it vibrant. Otherwise, I always say that we can't keep pouring water into a leaking basket or bucket. If IPPs or generators give you power and then you can't, account for the power, then it's going to be very difficult going forward. So yes, to just answer your question directly, I think they have to meet each other halfway. They should sit down with government, the government should sit down with IPPs, and then they can meet each other halfway in a way, so that whatever be the case, there shouldn't be power cut to the grid. Otherwise, that do not bother well for the larger population. And it's going to be very difficult if that should happen, Daryl.
Could these deaths have been avoided in the first place?
Yeah, certainly. Like I mentioned, if you look at the power generation sector, we have three chains, and these three chains are intricately linked together in a way that if there is shortfall or if there is any intricate inefficiencies within one sector, the cascading impact on the other sectors will be dire. And in these sectors, I always say that the distribution is the weak link within this chain. So if they give you power and you can account for 20 to 30% of that power, there's going to be a problem. Now, going forward, I think ECG or the distribution chain, ECG who champion the distribution chain, will have to make sure that they have to be innovative in their revenue, mobilization. They have to target the SOEs and institute measures. Governors to understand that SOEs cannot have their way out all the time. They have to target SOEs and make sure that they improve their revenue mobilization ability. That's number one. Number two, I think also we have to diversify the generation portfolio. To encapsulate things like renewables, especially solar. If we do that, I think the burden on the thermal generation plant will be reduced to the barest minimum possible. In this case, I always think that government can create enabling environment to bring in private sector to enter into the renewable space, especially solar. There's a lot of potential in solar. And some analysts are even saying solar is becoming competitive or even cheaper as compared to the conventional thermal stream. And so, yes, if you open the generation, if you diversify this, and what the government needs to do, not to invest that much, but just to create that enabling environment for private sector to buy into, solar panel installation, especially household. As much as renewables like the power cannot take off, industrial requirement because of the, intermittency and the seasonal nature of them. However, for domestic or, community use or domestic use, they can actually have an impact. And that would have shifted the power, the available power to industry. If that happens and we have so much available power within the grid from diversified sources, it's a conduit to reducing power to the end user. It's a conduit to getting power, the per kilowatt power the end user pays at the utility point. And also, I think the ECG, what they need to do is just to make sure that they should be efficient. Once they are efficient, I believe most of this situation wouldn't be where we are. We wouldn't be where we are if they were that efficient. Yeah.
Well, speak about revenue mobilization. We know that the ECG has been doing that in the last couple of months. The company has been going around to get institutions that owe it to pay. Could this also justify an increment in tariffs? And I'm also wondering, how much can they retrieve from these exercises they are undertaking to be able to settle the debts?
Yeah, so my first, I always say that increment in tariffs or taxes is a lazy way to go. It's easier to think about that, but the dire consequences are, they have dire consequences over the overall economy. We always have to think about the impact of increment in taxes or utility bills on the economy, because we need to get the economy going. If energy costs become so expensive, that has its own dire consequences. So I don't want to go there. I don't think that's the place to go. To say that we're going to increase tariffs. I always say that, like I mentioned earlier on, how do you keep on increasing taxes? Tariffs when you have a lot of losses. if you look at the tariff structure as we speak now, Daryl, we have a component we call distribution losses, generation, transmission losses. Those components are very huge, and the end user pays for this. So if we can manage to arrest or plug these leakages, and let's say we manage to even pull out that component from the tariff structure, it's going to bring down the cost of tariffs. So at this moment, I don't think there's any justification whatsoever, to try to say we want to increase tariffs. If we want to do that, then let's see how the revenue mobilization will go. Because what is the essence of burdening consumer when you can't retrieve it? And it has the other negative side of it is that see the amount people are paying, they are complaining. And when the tariff becomes so high, there's a tendency for people to bypass. It will increase a lot of illegalities.
All right.
Illegalities are not good, but of course, if tariffs are very high, people have a tendency to go through other unconventional means to get power, and that will not be good. So yes, I don't think tariff is the way to increment in tariff is the way to go. I think they have to just more be innovative in mobilizing whatever has been given to them so that they can get it back.
30 seconds. So the government is proposing a restructuring of the debts over time, and so that looks like the way forward for the government. Your thoughts on that?
Yeah, I think, clearly or undoubtedly, Ghana is in difficult times. So, it left to the IPPs. That's if they think that's a credible way to go, that's certainly what they can do. That's certainly what they can go for. So, debt restructuring, it has its own, repercussions. So, what I think that has to be done is that the government will have to explain to them, to the best of their understanding, the impact of that particular restructuring. And so that whatever fears that the IPPs may have and their fears are able to be allayed, I think that could be one of the conduit that we can use to support this situation, Daryl.
Dr. Isi Sulemana, energy strategist, thank you as always. One move on now. President Kwawu has kept the COVID-19 levy despite calls on him to scrap it as the government lifts COVID restrictions. Now, the COVID-19 health recovery levy on the supply of goods and services and imports was meant to raise revenue to fight the pandemic. Now, the president, in an address to the state Sunday, said, although the 1% tax is unpopular, government will continue to charge the levy. Take a listen.
Let me make it clear that COVID expenditures, essentially unplanned, have been subject at my instigation to audit by the Auditor General and are going through parliamentary processes. We all deserve to be reassured that the crisis was not used as a cover for corrupt practices. The COVID health recovery levy that was introduced to help fill some of the expenditure holes might not be the most popular tax, but I entreat all of you to bear with us. The COVID Trust Fund has performed an invaluable service, and with these developments has reached the end of its mandate. I thank the trustees as well as all donors and contributors to the fund. It is likely, God willing, that this will be the last in the series of fellow Ghanaian speeches on COVID.
Associate Professor of Finance at the Andrews University in the U.S., Professor Williams Pippa, is with us on Zoom. Good afternoon to you, sir. Any justification for keeping the COVID-19 levy?
Good afternoon, Daryl, and thank you for calling me at this time, and good afternoon to your viewers. So from what the President has said, my inclination is that the President wants to use the COVID-19 levy to increase revenue mobilization in the country. Where we find ourselves as a country in Ghana, we need to find a way to increase the revenue. The alternative for the government is probably go to Parliament and change the name of the tax. That's all, and then you have to justify why that 1% still will have to still be there. That will probably settle the debate that is ongoing. But from the look of things, it has come to stay, and until we get out of these financial challenges we find ourselves in as a country, this 1% will still be on our books.
Well, I guess also that the challenge with most people is government's lack of transparency when it comes to COVID-19 expenditure. The Auditor General's report on this cited some misappropriation of funds. It could be a reason people are saying, oh, you're going to be charging us 1% still when you can't even account for how you spent money supposed to fight the pandemic.
I mean, that has been the challenge with government, not this particular government. Accountability and transparency with all the taxes we have been collecting within the country has been a major challenge. I'm sure as we are learning from what we have submitted as a country to IMF, we are trying to be more transparent now. And I'm sure going forward, maybe we will change our ways and then be able to account for the taxes that we collect. The financial challenges in the country is very, very serious. We just had a discussion on the power producers declining to accept a restructuring of their debt, threatening to cut off the power, which is going to cause a major impact in the country. The only way for government to be able to pay is to find ways to raise revenue. And so, though government has not been transparent, they try to keep they are trying to keep this 1% to raise revenue. To me, if we strengthen the hand of the internal audit agency in the country and allow them to work, I'm sure we'll be able to find a way to stop this issue of accountability, which is not well done. That was, remember, it was a precondition from IMF that gave way for the 3 billion. We have still not even accounted for. We only accounted for the money we received, but not the one coming from the VAT component, this 1%. And I'm sure a lot of, even the president admitted it in his speech, that people use it to perpetrate some mismanagement of funds. But I'm sure the audits will be able to bring a lot of these facts out. If the core system works very well, and those who went foul will be taken to court and then probably ask them to pay back the money that they took from the COVID fund.
You say that the smart way would have been for government to give the COVID levy a new name. I don't know how that would have been received in Parliament. That could potentially pose some hurdles.
I'm sure that is why the president is pleading that we still keep it as COVID levy. But if people are still debating that there's no more COVID and we want to change it, it's better to go back in the media review to say that we are adding the 1% to maybe to the VAT to make it, to increase it by 1%, something like that. In that case, Parliament is still, the value will be the same, but just that the name have changed and people will not see COVID levy again. Something like that should be modeled out and presented to Parliament for the media review.
The president is also coming under criticism for saying the IMF program is not a solution to our economic challenges. Now, we have said this several times here, so there are no surprises. But the question, I guess, is people wondering if the managers of the economy really even have a solution to the crisis that we are facing right now.
To me, that statement was very important, that you see that now the president himself admits that something has to be given more than what even the IMF is asking us to do. That is why he's saying that the IMF 3 billion and our own conditionalities we have set for ourselves and presented to IMF is not going to help us to solve the problem, because if you look at the program, by the time we get out of in the next 3 years, our debt to GDP will still be around 55%, between 65%. The certainty means that we will still be around probably what we term as moderate debt distress country. So that is why I'm sure the president, recognizing that, is saying that yes, we have gone to IMF, but that will not be the only way out to solve the problem. We may have to do more than what we have been put in the budget. In a way, the president is preparing the mind of Ghanaians that expect more austerity measures. Government is going to try to cut or probably reduce their own expenditure height patterns, to find a way to be more efficient, we find a way to be able to account for the funds that they have, and then to be able to eliminate projects that, to me, I think that needs to be reviewed, or what IMF term as rationalization or reduced, and those that need to be reprofiling in terms of and duration will have to be done to be able to create room for financial free cash flow for the country to be able to pay our debt. All these things that we are doing, the aim is that we will need to free our hands or get some cash to pay our debt. We are not able to pay our debt. Our ratings from the rating agency will still not improve. That is why now we are rated default. We have to start paying our debt to change the ratings. Until we do that, we will be classified as a fallen angel in finance term, where we find ourselves not to be able to pay our debt.
Well, one quick question. The president also promising resumption of key infrastructure projects following the deal. Do we have money to support that, and what projects should our monies go to?
If you ask me, first the focus should be how do we pay existing debt? Even before the president think of the resumption of other infrastructural projects. Any project we take on now, we cannot even use our own internal generated funds to pay for it. Unless we are getting some grant money for those infrastructural projects. Any contractor who also goes ahead to take government projects will have to probably prepare himself that the project you are doing is not going to be paid now. Because already there are some contractors who are old for years and are not paid. Unless probably government will want to be prioritize payment and pay those who are going to do certain projects now. But even the question is, where is government going to get the money from? So it's maybe there's some kind of magic or money coming from somewhere that government is going to use to focus on infrastructural projects. But at the moment, your creditors are asking you to pay how much you owe them. So that should be your focus to be able to turn things around. We have to find a way to reduce our debt burden. The more we go into other capital projects or infrastructural projects, we will find a way to increase our debt, and the situation will worsen.
All right, Professor Williams Pipra, Associate Professor of Finance at the Andrews University. Thank you so much for speaking with us. Now, let's head to the financial markets, because government's heavy borrowing on the treasury market triggered another marginal undersubscription of T-bills as interest rates continue to surge. That's according to the results of the latest T-bills auction. Head of Trading at Republic Securities, Patrick Edemagama, joins me. Patrick, let's begin with how the auction went last Friday.
Okay, good afternoon, Daryl. So on the money market, the government raised a total of 3.18 billion against a target of 3.43 billion, recording under subscription about 7%, which is about 248 million Ghana cedis. Among these, bids of about 30,000 were rejected due to high yields quoted by investors. Again, we can see that the trend is continuing. We've seen the 91-day clearing at 20.8, increasing by 23.73 basis points. We've seen the 182-day closing at 23.62%, increasing by 26.77 basis points. And then the 364-day bill closed at 28.02%, also increasing by 42.61 basis points. Again, we can see hikes in the bids accepted, as the 91-day saw as high as 21.16% in terms of interest rate being accepted. Also, the 364-day as high as 28.15 interest rate were accepted. It's again showing where the appetite of investors are. But for the fact that some bids have been rejected, it's also showing that the government is not that desperate. We can also attribute this undersubscription to the level of target. The target is relatively higher than what we've been seeing in the following.
So for the third week running, government has failed to meet its T-bills target because of heavy borrowing on the financial market. I want to know what is running through the minds of investors.
Well, under subscription does not really give government a good image in front of investors. But if you look at this level of target and what the government always goes for in the previous weeks and months, you see that this is relatively higher. So it doesn't mean the government is that desperate, but it's just showing the level of the target.
Also need to point out that interest rates continue to surge along the yield curve. Where are we at currently?
Well, so we are seeing the interest rate rising slightly. We expect this to continue until a new measure is put in place to at least drive the rates down. I'm sure when we start getting the funds from the IMF hits the market, then we should be able to see that interest rates will start coming down, and the appetite of investors will have to also follow that same trend.
And on the stock market, there's anticipated mixed performance this week. Give us a rundown and what else to be on the lookout for this week.
All right, so for last week, the composite index fell on the back of 5 stocks. We've seen stocks like Stanchart, GCB, MTN, Benzo Oil Palm, and Enterprise Group dropping. And the gains recorded in Farm Milk, Unilever, and Total couldn't hold the index, but it fell. We are also seeing demand mount in stocks like Farm Milk and Cow Bank as of now. As we are speaking, SIC has lost the Peswa. Again, they are still heavy on the sell side. So SIC and some other stocks and all the financial stocks are seeing this level of selling pressure, and we expect that to continue for some time.
All right. Thank you, Patrick Ede Agama, Head of Trade in Republic Securities. Thank you so much. Enjoy your week. Well, this is the marketplace. More news on our website, myjoyonline.com/business. You read more about our top story there. Independent power producers threaten to cut power supply by June 30. Also, Fit Solutions maintains 2.9% growth rate forecast for Ghana in 2023. myjoyonline.com/business. My name is Daryl. Kwawu. Thanks for watching. We leave you with today's episode of the Money Lab.
Hi there, my name is Benjamin Opokuwari from Alliance Life Insurance. Welcome you back to Money Lab. Previously, we talked about the documents needed to make an insurance claim. On this episode, we will be talking about who qualifies to make an insurance claim. This may be the policyholder himself or herself, the named nominee, trustee or beneficiary, anyone whose property has been damaged by the insured vehicle, the injured victim or victims, the administrator of a diseased estate, parent or guidance in the case of minors. Note that your insurance company will not mandate you to engage the service of a lawyer. Engaging the service of a lawyer is a matter of choice. Thank you for joining Money Lab. See you in the next episode.